It's not often we get these two together. What is the trade opportunity given the ECB's predictable and non-farm payrolls could surprise to the upside?
Well, I think it's a bit difficult, really, to position yourself ahead of these events. The ECB, as you say, is more predictable. We're not expecting anything much, certainly after the slew of measures they reported on June the 5th at the last policy meeting. The non-farm payrolls report, the data, labour data out of the US, much less predictable. So, again, many investors unwilling to take much of a position ahead of those numbers. I think many, though, are braced for a stronger print. The consensus is 215,000 in terms of non-farm payrolls today, but in the wake of yesterday's much stronger ADP report, I think many are probably braced for a small upside surprise.
So where do you see the yield going? I mean, we've been creeping up anyway, right? Where do you see this going? Where do you see it in a month, 2 months?
Well, our year-end forecast for 10-year US yields, for example, is 290. So that's really only 25, 30 basis points higher over a 6-month horizon. So our sort of base case is that yields do creep higher, not particularly aggressively so. That's in part because we don't think that the Fed is going to be aggressively considering moving towards rate policy normalization as QE comes to an end. In fact, our forecast is that Fed funds remain on hold until the final quarter of next year.
And what about the bund yield? What does the bund yield do in the meantime?
Well, end of this year, we think that 10-year bund yields will be at around 1.4%. So that is certainly much more bullish relative to the US, and I think that's the key story. In terms of directionality, we, like many investors and forecasters, have found it difficult to predict where yields will go this year. We certainly were of a more bearish disposition at the beginning of the year on the basis that you would see a stronger US recovery and a more bearish Fed. We were wrong. Many people were wrong. Having been wrong for so long, that call actually looks much better now. But I think while in outright terms our view on directionality remains somewhat uncertain, what we are confident of is whatever happens, US Treasuries will underperform bunds. Whether in a bear or a bull market, the Atlantic spread will continue to widen from here. And that's one of our key themes.